What's up, investors? Ken here from the Dyslexic Investor, and we're going to be looking at a wonderful story from our favorite subreddit of Wallstreetbets. Look at this. It's the St. Patty's or some Thanksgiving themed Wallstreetbets, dude. All right, so this user throwaway58275 posted in the title that he's held his nearly 1 year or 10 year or decade of 3x leveraged bull ETFs, and showing his position size here from this image. You see security holdings of FAS and SPXL, and the quantity, the value, and then the daily change that he's had. Super interesting, right? So when did he buy? He actually bought in the May of 2010. So that's we'll look at a chart here in a second. The article doesn't really go, the post doesn't go into many great details, but he just started out with $170,000 and turned it to nearly 1.6 million, which is fantastic, absolutely wonderful. Good for him. I'm so happy for this individual, and I sincerely mean that. Doing some clapping for him right now. So he is, the reason why he's posting a lot about this is he's very politically outlooking. He thinks the trade wars is going to just make things worse. The potential impeachment of President Trump, and then different various others Democratic candidates coming into the race, and it's just worrisome, and he literally doesn't want to lose his money. Which I totally understand that. That's fantastic. He took a crazy bet and made it fantastic, I guess. Again, so let's go ahead and look into the stock itself. So this is SPY. This is your S&P 500. So we're going to go back all the way to May. So what we're going to do, we're going to draw on how much in comparison he made to, so 197%. So if I just bought SPY and held it for 10 years at like $60 or $100, I would be at $300. So I would only have gained 200% in 10 years. That's not terrible. That's nothing, but it's 1/3 of what this individual made. So if you go to SPXL, which is the ETF that he was trading, and as you can see, it looks extremely similar to the S&P 500. So if we go, and he said May, it's February, May. So we're going to draw a line here, trend line, all the way up to here. It is at 1620. So 1,620% he's made on his capital. That is bonkers. That is fantastic. So basically, this ETF was trading at like $4, and now it's at 60. And how is he able to do that? Because it's 3x levered. What does 3x leveraged mean? What does that mean into content? So we can look at here on what 3x leverage accounts mean. So this is the Motley Fool, hit and miss on sometimes what these guys and gals write. Basically, with their breakdown of these ETFs, is it's okay in the short term to kind of hedge your bet, but not to play long term, because in long term the value could go down. And if you go back into the post here, a lot of people write that 99 times out of 100 the positions will go to zero due to volatility and decay. So basically meaning, how are these individuals able to get 3x leverage? They use debt. They use, honestly, financial magic to create 3x leverage a day. So they use the price. They keep the price fairly low. So if the price just moves up $1 at $50, you're talking about, that's over a percent. That's 2% right there. And that's how they're able to get this 3x leverage. You can do this 3xL. Or SPXL is long, and you can also do the short position. So you can 3xS, and you can kind of see this. This is what people mean when it basically goes down to 0. This is just the inverse of what we were just looking at. So this was at 26, and you would just go completely short. Because these levered positions are just super tough to maintain through some of this volatility. Because again, it moves 3 times the amount. So if it goes towards you or goes in a bear direction or negative direction, a lot of people get out. And this is something that the article kind of dives into. So I wanted to kind of do like a side by side. So we have SPY up top, we have FAS down below. It looks pretty much similar, right? Wait until we start moving it out some more. So we do 3 weeks. 3 weeks, like that's pretty much right. Like, but again, you can kind of see here, it's not going to be. It kind of mimics the same pattern because that's what it's supposed to do. But once it goes down, it might push through. If you look at some of the moving averages here, this area right here, when it's like high volatility, it doesn't perform as well as the SPY here. And then when this little downtrend happened, it kind of it goes a little bit too far of exhaustion, more towards the downside, because again, it's 3x levered. When things go down on this particular thing, it's going to be going down quite some time. So if we're looking here, we're going to draw another trend. So from the top, oh, I just fat finger that. So we got to go from here to here, we're looking at 16%. Okay, that's considered bearish right there for sure, almost a recession like-ish. Then we're gonna go here, and there's gonna be 41%. That's not even the right point. So we go here. If you would listen to me, sir. Okay, at 45%. So if you open up your account and you see that you thought you had 100, just make it simple, $100,000, and then 3 weeks later your investment is at $50,000. It's kind of a mind-blowing compared to the 20% here. So this is the example of why 3x leverage ETFs are not for everyone, and how it could really ruin your day, and depending on what your time frame for investing is, and so forth. Super interesting, super happy for this individual. That is fantastic. Again, here's the numbers here. That's this mind-blowing on how much that little bet paid off for him. And again, he didn't start with a small chunk of change either, so that the performance overall. And I just kind of wanted to show this is actually the site, that the ETF that runs it. So the thing is too, the expense ratio is a little bit higher than in your normal SPY or an index fund. It's going to be usually a target market SP500 index fund. It's going to be at 0.04, 0.05, so like very small, minimal percentage points. When you start getting up over 1%, that can start to be taking some real gains away if you're doing long-term investing. Yeah, I hope everyone enjoyed this, liked it. Don't forget to like and subscribe. Again, thank you so much for watching. This is Ken from the Dyslexic Investor. Catch you guys on the flip side. Peace.